Hey everybody, welcome back to the channel, and today we're going to do something that I believe is a little overdue. I like to around once a month go through the comments on my channel and pick out some of the more thought-provoking ones or some of the more opinionated ones and respond to them in a video rather than just responding. That way you guys can not only see the comment, but you can hear my response, and that is what we are going to do today. So I'm going to go through my last 3 videos. I'm going to pick 2 comments per video, and we are going to respond to them right here. So let's get into it, but really quick, if you're new here, don't forget to subscribe if you haven't done so yet. It really helps me out, and I greatly appreciate it. All right, let's take a look at some of these comments. All right, so like I said, I went through my last 3 videos, and I picked 2 comments from each. So let's go ahead and start with the first one. And this is a long one. It comes from the video where I called around silver dealers to see what they were paying for silver eagles with the spot price coming down and premiums remaining very, very high. This is a long-winded one, so let's go ahead and read it. Jay Benning says, I still find it strange that coins and even round/bars are often quoted as spot plus X or spot plus Y. When I go to the hardware store and ask how much copper tubing costs, I don't expect to be quoted in copper spot plus X. I expect the price for a product that is generally decoupled from the underlying cost of the commodities that are used to manufacture it, set by the supply and demand of that product. No one is buying up silver eagles to melt down and make electronics with. That's what people are paying spot for. Huge ingots for industrial use. Silver coins are an end-use product in themselves and value beyond just the spot price of that commodity. Though I suppose that enumerating the additional value beyond the commodity price is one way to do it, all markets are governed by supply and demand. If there are 50 people at your LCS that only want silver eagles within 100-mile radius, and someone is willing to pay 50 over spot for it, then the sale price should be 50 over spot. If no one is willing to pay more than 50 cents over spot for it, then that's what it will sell for if the seller is willing to sell it for that. If they're not willing to sell it, then there is no market and that product is literally worthless. Let's get away from thinking about silver in terms of spot plus X and start thinking about it in terms of what the actual value of a silver eagle or silver round or silver bar or gold or whatever is actually worth to you. So there's a lot to dig into with this comment, a lot said here, very thought-provoking, well thought out, and my first initial response to him when I actually typed a response to him was that you don't walk into a hardware store to buy copper tubing the stack. That's not its purpose. Its intent is to be used in manufacturing, and of course there is going to be a number above that. That being said, copper tubing is also still, the value of it is still based on copper. Like if copper goes up quite a bit, the cost of your copper tubing goes up. Same with wood. You go into Home Depot to buy a 2x4. If the cost of wood is higher, the cost of that 2x4 is going to be higher. So even though you're not looking at spot plus X or spot plus Y when you're quoted the price for the copper bar, it is still based on that commodity. The same goes for silver eagles and silver rounds, except for the difference is the goal of stacking is an investment or a hedge against inflation. We're not buying it to, build a house or to, fix piping in your house or whatever it may be you're buying your copper tubing for. We're buying it with the intent of protecting our wealth, hedging it against inflation, investing for when silver does go up. If you're one of the people who believe that silver is going to skyrocket, that's why you're buying it. You're buying it for that intent and purpose. So you absolutely have to pay attention to spot price when you are buying your silver rounds and silver eagles. You don't necessarily have to pay attention to it when you're buying your copper tubing, because at the end of the day, when if copper goes up to $50 a pound, you're not going to be ripping your walls apart to pull that copper tubing out. Well, I don't know what the world's going to be like, but you get my point. The intent isn't to then rip your walls apart and get that copper tubing out and then resell it, because that's why you initially invested into it. So I have to disagree with you here. It's definitely going to be coupled to spot price. And I am 100% for a free market, by the way. If you have a silver eagle that you want to sell for $200 and no less, more power to you. But let me point something else out to you as far as the silver eagle supply and demand issue is concerned here. And that's something else that was in his comment. There are plenty silver eagles right now available for purchase. You can go to APMEX's website and add as many as $99.99 to your cart. They don't allow you to go to 10,000. If you go to SD Bullion, they stop you at I forget what it is, like 23,000, I think, is what they currently have in stock. So if you go to SD Bullion's website and you add silver eagles to your cart and you just add as many as you can, make it 100,000, it will tell you how many they have available. Last I checked, which was like yesterday, they had like somewhere around 23,000 2022 silver eagles available. Same goes for JM Bullion. They stop you at 10,000. Money Metals, they stop you at a number. The point is is that there are plenty of them out there for the current premium. Now, it can be argued, and I won't even argue against it, that if premiums were to get back down to say where they were or close to it, like $4 to $6 over spot for Silver Eagles, then it very well could be argued that there is not enough supply of Silver Eagles for that premium. And that is an argument that can be used to holding the premiums where they are. That being said, I do think even at this point that they are still way too high, especially with spot price coming down into the 18s right now. So when you look at $14 over spot, $15 over spot some places, you're looking at almost a double spot price to get one Silver Eagle. That's absolutely insane. And for that reason, I'm not currently adding Silver Eagles to my personal stack. I'm sticking with cheaper semi-numi stuff. I'm sticking with generics. I'm looking at 90% stuff that I can get a lot closer to spot. I have no problem paying a premium for physical silver. There's production cost into that go into play. Obviously, the dealers need to make money as well. I'm not arguing that at all. I'm just telling you that, these dealers, online bullion stores had no problem making it when silver was, $1.50 over spot or so for rounds, when it was $4 over for Eagles. They were still around then. Right now, they're just they're reaping the benefits, especially authorized purchasers, APMEX being one of the 10 U.S. authorized purchasers. They're reaping the benefits of being able to get them, even if they have to wait. They're able to get them from the U.S. Mint for $2.35 over spot, and they're charging you $14.99 over spot. If you buy 100 Silver Eagles and get it for $13.99 from APMEX instead of $14, they paid $2.35. You're paying them $14. They're making $11 per ounce times 100 ounces. They're making $1,100 on your purchase. That seems like a pretty good profit margin to me. Let me know what you think in the comments, though. Jay, thank you for the comment. Very well thought out. Even though I disagree, I definitely appreciate comments like this because it makes you think. It really makes you dig in to some of the underlying reasons that, things are the way they are. And so I always read comments like this. I always appreciate them. And thank you. And I hope that you continue to watch the channel and leave comments on my other videos as well. All right, let's check out our next comment. Here we go. Okay, so our next comment, and I'll make this one quicker, that last one was kind of long-winded, comes from Matty Reardon. He says, why do people think silver will be of any use in a recession or depression? The only things of value will be for survival and eating. After the recession, precious metals will have some value if society still exists. If there's no stock market, nothing but fortified property, hydropowered cars, solar setups, and hunting equipment will be of any use or value. Shiny coins will be useful for paperweights, and that's it. So the reason that I disagree here is, especially coming out of a recession or depression, even if there is no stock market, is there has always been a medium of exchange for thousands of years, and usually gold and silver has fit that bill. Now, I'll also say before I get into this that I also believe that you should also have food reserves, survival skills, things like that. I'm not ignoring any of that at all. But that medium of exchange will be important. So let's say there's 3 people that have products. You're the guy who produces bread. There's a guy who produces solar panels, like you said, and there's a guy who has ammo. Well, the guy who produces solar panels needs ammo, but not bread. You need the solar panel. So he's not going to give you a solar panel for the bread because he has no use for the bread. So what would you exchange? You would have a medium of exchange like gold or silver. You would trade your gold or silver for his solar panel, which then he could use to exchange it for the ammo that he needs from the third person, and so on and so forth. That's why there is a medium of exchange. That's why money works. That's how money works. So I do believe that it will have value in that scenario. And like I said, for history, gold and silver has been that medium of exchange. So that's why I disagree here. Either way, Maddie, thank you so much for the comment. I definitely appreciate it. Let's check out the next one. Okay, so this next one is on a video where I called around to see what coin shops were selling silver rounds and silver eagles for, with the premiums, or the spot price going down. We wanted to see where premiums were. Ryan says, I was watching another channel yesterday, and the coin shop owner paid the seller $20 per ounce for 40 2020 silver eagles. He said the seller was happy the shop owner is going to make a small fortune on those. Given that this comment is a day old and he said he was watching it yesterday, it was 2 days ago, that means at the time of this recording, silver was around $19.20 an ounce. So he was paying less than $1 an ounce over spot. Generally, I don't call out coin shops. I definitely don't call them out by name, but I will say that that is abysmal. And I'm shocked that the seller was happy. The seller would not be happy if they watched my videos, because I showed you that every coin shop I called paid well over 80 cents or so over spot, which is what this coin shop offered. So, or coin shop paid, I should say. So again, I don't call out coin shops, and every coin shop has their own needs. They have their own customer base. He may be selling them a lot cheaper too. I don't know the whole story. I don't know what his overhead looks like. I don't know what kind of profit margins he needs to make. But as far as the seller is concerned, let's just move to the next one. So before I dig into this one, I will say that I am not a financial or legal professional. Please seek actual financial or legal advice from a licensed professional or lawyer. Don't listen to what I'm about to tell you for professional or legal advice. That being said, what he is talking about here is Form 1099B. And what that means is, let's say you have 10,000 ounces of silver eagles and 10,000 ounces of silver roms. We all wish, right? But still, you walk into a coin shop and you sell them the 10,000 ounces of silver eagle. They are not required by law to issue you a 1099B. That's not a reportable sale. That being said, if you sell them 10,000 ounces of silver rounds, they are legally required to issue you a 1099B, and that is a reportable sale. That being said, the IRS they classify silver and gold eagles as collectibles, and they tax them as such. So even though the company is not required to issue you the 1099B, legally you're still on the hook for capital gains tax for any profit you made on that purchase. So if you bought those 10,000 eagles for 100 grand and you sell them for 150 grand, you're on the hook for paying your tax on that $50,000 profit for capital gains. So keep that in mind. Even though the company is not legally required to issue you that 1099B, you are still legally required to pay that or that capital gains tax. Whether or not you do, that's between you and your lawyer and your financial advisor. I'm not telling you what to do. I'm just telling you what the law states. All right, next comment. All right, so this next one comes from Stackers Are Losing Interest. This was a video I did. It was a Writing with Secret video. And by the way, if you haven't seen any of these videos that we're covering today, feel free to check them out. I'll put links in the description below. Nerd Analyst says, I agree that the prices of physical and paper are connected. Premiums are inflated because dealers do not want to sell off below a certain price. We saw this when silver bottomed at $12 an ounce. Dealers either pulled their inventory and refused to sell or refused to go much lower below 20 an ounce. Premiums are the indicator of how much there is a disconnect. Physical is valued more because it is tangible. Spot is a great starting point, but the lower it goes, the wider the percentage gap between paper and physical. I believe that the days of bullion and even ASCs 3 to 5 to over and generics at 1 to 2 over are gone. I hope that's not the case. I would love to see the premiums come back down, but I understand what you're saying there. We're not going to see them anytime soon, in my opinion. I want them to return to that. I believe they should return to that, but I think we're a little bit off from that. I actually said earlier in the video, I believe that we could return to that eventually. But anyway, premiums are inflated because they don't want to sell it below a certain price. For example, when it was $12 an ounce at the beginning of the pandemic, there's a difference between that and this. The difference between now and then is you couldn't get silver from anyone. Wholesalers weren't selling, dealers weren't selling regardless. Silver is still available from wholesalers. So if a shop, here's a good example. Let's say a shop buys 100 ounces of silver at $30 an ounce. Now silver's 18, they have to sell it at 22, but their wholesaler is selling it to them for 20, right? So even though they have $30 an ounce in that silver, if they sell it at $22 an ounce, 100 ounces at $22 an ounce, and then immediately get on the phone and order that $100 ounces back at $20 an ounce or $22 an ounce, they keep the difference. So if they sold it at 24, bought it at 22, it doesn't matter if they paid $1,000 an ounce, they still have the same 100 ounces of silver plus the $2 or $4 an ounce in profit that they made from selling it. So when silver hit $12 an ounce, that was not happening because they couldn't get it from anybody. Nobody was selling it. Wholesalers weren't selling it. Dealers weren't selling it. People weren't selling it to the shops. So yes, in that situation, they would pull it all back because they can't replace it. But as long as they have a source to replace it for cheaper than what they're selling it for, I don't think any dealer in his right mind would be holding silver back in today's market. And I do believe for that reason, and the fact that everyone does have it available, these premiums should come down. And again, I spoke to that earlier in a video when I was talking about how many ASCs were available on different websites. All right, so here is our final comment. Let's pull it up and see what we have. All right, and this last comment comes from Gary7. It's on that same video. He says, part of my business involves buying precious metals from retail, and I also have ties to several coin and bullion dealers in my area. I just wanted to confirm that all of us are running out of cash from all of the retail sellers coming in to sell at the lows. I've purchased more silver in the past month than I have in the previous several months combined. I feel bad for the hoi polloi. I don't know what that means, but I feel bad for the people who buy at the highs and sell at the lows, but that's human nature. Those of us who are aware just keep on stacking. And then I like this. He actually had a guy respond to him who said the ones who hate silver the most are the ones that bought high and sold low. John says, nah, they don't hate silver. They just don't understand the value of the long-term hold and thought they would get rich quick. And the reason I liked this little conversation between these two, even though it was really short, is because it goes back into what I said in the specific video. The reason that, you know, I was on board for the silver squeeze at the beginning, but very quickly realized what was going on, and I kind of started talking against it, is because I saw what was going to happen. We are going to have another drop in silver. It happens just like this, and there's going to be a lot of people that made let's just say ill-advised investments. They invested way more money, they well beyond their means into silver, and then they lose a bunch of money when the market drops, and now they go in and they sell. They bought it high, and now they're selling low just to get out and move on to the next thing, because they're looking for the next GameStop or the next AMC or the next Bitcoin. They're looking for that next get-rich thing, and silver is not it. Silver's never going to be it. So again, I'm not a financial advisor, but silver will never get you rich. That's not the point. Anyone who knows anything about silver, like he said, just keeps on stacking, because we believe in silver and gold as real money, whereas, of course, we don't believe in what you call paper money or fiat currency, something that's not backed by anything. Regardless of whether or not the dollar is at strong 20-year highs, we look at the U.S. debt, we look at everything else, and everything else that's going on with record high inflation and everything like that, and we realize that eventually it's going to crash, and that's why we are sitting in silver and gold. And I will point out that, yes, we are looking at record high inflation, but we are also looking at the strongest dollar in over 20 years. That is something to keep in mind when you look at low spot prices today. So when that dollar crashes, and it will, that will probably spark silver and gold making a move on the upward trend again. When that will happen, I don't know. Maybe I'm wrong and that won't happen at all. The dollar will crash, silver will crash along with it, we'll all go poor. But I don't believe that. For a second, I believe in the fundamental reasons of stacking silver, which I spoke about in that video, and that's why I put that comment in there. So that's what I had for you guys today. I hope that you enjoyed the video and me going through these comments, and if you guys have any other, thoughtful comments like that, leave them down below, leave them on other videos, and who knows, maybe your comment will be chosen for the next time that we do this. Hopefully it'll be in the next month and not 2 months like it has been for this one. But I do look forward to doing these videos, and I do hope that you enjoyed them. So thank you again so much for watching. Don't forget to subscribe, and we will see you in the next video.